Hello, everyone, and welcome to another episode of Majlis and Markets. As always, I'm your host, Hassan. Really happy to be doing another episode on YouTube. I think overall we're at episode 66, I want to say. I'll double check that afterwards. But I think we're at episode 66. And yeah, I'm really pleased to be doing another episode. And please do remember to like, share, and subscribe to this podcast and vodcast, I should rather say, and also all our social media channels as well at Majlis and Markets. But now I would like to introduce my guest, Rachel Ziemba. Rachel, welcome back to Majlis and Markets, part two.
Thank you, and congratulations. This has become a real, go-to in this space. So
Thank you so
glad to
much.
be back.
Rachel, I was just talking to you offline just now. I was like trying to remember when we did our first episode, audio episode. It was way back in April 2024, completely different time, although it was like over a year ago, lots changed. And I was just saying to you just now offline, like it seems like every day the world is changing and like circumstances from even like 2 months ago are completely different now. And I really want to talk to you about a lot of things. And I want to talk to you about BRICS. I think that I know the BRICS summit was just held in Brazil on Sunday last week. I want to talk to you about Trump tariffs and Donald Trump's thinking and what this all means, because I'm really fascinated by this topic of BRICS and the global south and all of these things. But before we get into all of that, Rachel, could you give us an update? What have you been up to since our last podcast?
Sure. I continue to do a lot of work on coercive economic policy and emerging markets. I will say in the year since we last spoke, I've done even more on tariffs, both for political coercive goals, which we'll probably get into, but also economic. I've also gone back to the classroom. I was teaching at New York University this spring semester, international political economy. So talking about all of these themes, including even a little bit about Islamic finance. And yeah, just trying to help clients and policymakers and other people sort of navigate this environment. And I
Amazing,
guess the
amazing.
other thing I've done is that I've launched a Substack called Weaponized Economy,
Nice.
where I talk about, I've always written about these themes, but where I talk about tariffs and sanctions and how the world is being reshaped by government, sort of government attempts to channel markets. So both sovereign wealth funds all the way to tariffs and sanctions.
Fantastic. Yeah, I really think now, especially now with Donald Trump and the world we're living in, politics and finance and the political economy of how things work is very, very important when you're investing or just trying to understand and make sense of the world that we're living in. To begin with, Rachel, we had the election of Donald Trump in November last year. The return of Donald Trump or Donald Trump 2.0, what do you think that's meant for the global economy to begin with?
Yeah, so I will say that Donald Trump 2.0, sort of they came in prepared in a way that they didn't with 1.0. Right? They came in with a plan, largely in Project 2025. They came in wanting to make big change on trade, even to a greater extent, I would say, than in the first Trump administration, when, of course, we saw many sort of trade agreements being renegotiated. We saw what seemed then to be high tariffs on China. But, we've really seen in the first, not even 6 months yet, quite a lot of policy shifts. We also came in with real shifts in the U.S. Labor market by virtue of the sort of deportations and the immigration agenda. But I mean, I think looking globally, what I will say is also that for, dynamics of the first Trump administration, the Biden administration, and then Trump again, have, I think, called into question the longevity of signing treaties and deals across a number of domains. This sort of risk that the U.S. might seek to renegotiate when it's in its own, interest. And other countries do that as well. But I think that, it's a different kind of threat to the multilateral system. Now, and the multilateral system's not perfect by any means, right? We'll get into that when we talk about the BRICS, right? A lot of what the BRICS are trying to do is to reshape and remake the multilateral system as well. But I do think this Trump administration preference for bilateral or small group agreements, this desire to sort of shift the role role in providing global public goods, I mean, this is quite a sea change.
I mean, one of the things that just was, I was reading the UNCTAD report from yesterday, and obviously we've had a difficult couple of years with regards to global trade and the economy, and interest rates have been going up since 2022, although they should be coming down. Inflation's been really high in a lot of countries. I mean, the economic circumstances of Donald Trump inheriting office today, or 2024, compared to 2017 is very different, right?
Yes, that's correct. I mean, I think we have a global economy that where where supply chains faced a major shock in the context of the pandemic that in some ways turbocharged some new sort of trade relationships. We have sort of dynamic, elements of multipolarity, not full multipolarity by, sort of any means. And I think we also have a dynamic of demographics and aging populations and other dynamics. And even if it's not a message that the Trump administration wants to hear, we are even more solidly into an environment of climate change and more extreme weather events and financial costs associated from those extreme weather events. And so I think we have a Trump administration coming to power and talking about not just energy dominance, but additive energy, and sort of sending a message that, fossil fuels are still here with us to stay. But I think many other countries in the world will say, okay, that's great. We'd love to hear that. I'm thinking about some of the countries, that you talk a lot about on this podcast in the Gulf, different, sort of Arab states who are really thinking, they're thinking about fossil fuels being entrenched, but they're also thinking about renewable energy and just adding energy from whatever sources. So, I mean, I digress a little bit from the dynamic, but I do think this element of climate change and migration and the like are factors that are transnational issues that are difficult to address. And of course, we have some major conflicts going on and major risks, thereof. And I would say some new norms being.
Yeah. Before we get on to BRICS and what your thoughts are on that, one of the things I wanted to talk to you about, Rachel, was was about globalization. So I wrote a Substack, on my own Substack, about Donald Trump's tariffs, or his Liberation Day in April. And, I was doing research on this, and I was looking at things like friendshoring and the dynamic changes of free trade. I'm old enough to remember the Doha trade run at the WTO. I wrote an essay on that back in 2009, 17 years ago. Do you think now globalization, or the way we know globalization, is dead? Because I remember the HSBC, I think the HSBC CEO or the chair, he mentioned at a conference a couple of months ago that globalization as we know it is completely changed, or it's almost dead. Would you agree with that, or do you think it's a bit overblown?
Look, I think that globalization is really the interlinkage and burgeoning of trade and investment and movement of people and all of those sort of dynamics and capital. Some of those elements have been more open than others, right? And there have definitely been restrictions. I think we're definitely at a point where there are very few countries that are really saying, well, we want unfettered free trade, right? And even some of those who are sort of, pointing to WTO rules and I think rightly criticizing Trump administration policies, themselves, some of them have areas of considerable protection. So I think if we go back to like the 1990s and even early 2000s, where capital and opening markets was the goal. And even within the US economy, policy was being set maybe by what corporations and capital owners wanted, as opposed to thinking about labor and production. I think that's been a real shift. But we are still looking at a dynamic where global trade is going up, admittedly more slowly, where there still are integrated supply chains. What I think is happening now, though, and some of it is about supply chain issues that came about because of the pandemic, sort of mineral critical technology elements. We have governments being involved in either trying to reshape a lot of different supply chains. And so I think it is a very different global trading system, very different globalization. But this is, to kind of over dramatize how quickly these things shift.
Yeah, one of the things that I was thinking about before we started recording was that, we've been, since Bretton Woods and all of these things, we've been in mainly a US world-led order. where the US has created, or the US-led creation of things like the IMF, the World Bank, all these multilateral institutions. And it seems like the global South countries, or those quote-unquote global South countries, aren't really as represented as they once were before. And that with organizations or alliances, if you want to call it, like BRICS. I remember writing an article in 2023 about, what have the BRICS really done? And from my research and talking to people, economists such as yourself and strategists and other people, the BRICS is basically, from my understanding, an alliance of countries that were not happy with the global order, the way the global order works. And it was more of a Chinese-led, or China and India, let's say, or Chinese-led order for world politics, world foreign policy making. Would you say that's like the correct way to look at BRICS today?
I think that's right. I also think that as it's expanded, interests, the goals of different countries in being involved in BRICS shift. I mean, I think if you look at the genesis of why these countries were grouped and why the initial group were there, it was actually set up as an investment thesis, not a group of countries that were unhappy about it. They themselves decided to meet after the fact, but it was set up as a Goldman Sachs investment moniker, right? An investment thesis that didn't consistently really play out. And I think from the get-go, there were these questions. You had most of the BRICS members, and I'm thinking of the original 4 or 5, but the argument holds true more broadly, but most of these original entities traded more with China than they did with each other, right? And some of them have continued to grow fast, but not sort of at those levels. And some of them, their growth has slowed to a crawl. You can think about sort of Russia and that story being at least in part about the war and the war economy and the sanctions and inefficiencies there. But actually, even before the war, Russia was struggling to grow. So from an investment thesis perspective, it's been challenged. I do think a number of countries join for a few reasons. One is, yes, there can be a grandstanding sort of political, institutional sort of benefit from doing so up to a point. But also, I think a number of the new members look for opportunities, maybe not to invest with the whole group or to benefit from investment in the whole group, but to engage in minilateral and sort of bilateral closer agreements with some of the countries involved. And so I'm thinking about the interests that the countries like Indonesia or Malaysia, have in this grouping. But I will say, as we have within the sort of full members and the partners, we have countries that are sanctioned and are effectively off limits for investment. We have countries that are in debt distress and can't really attract, sort of meaningful investment. We have some that are very large surplus economies. So I think the challenge is that they agree more on maybe what they don't like to see in the rest, in the rest of the world, and that they don't want their foreign security and economic policy circumscribed by the US and others, but they also disagree on a lot of things. And I think you sort of see that in some of the recent communique.
Yeah, I was just about to say, before the expansion of countries, I think in 23 and 24, I'm just trying to think in my mind, what have the BRICS, other than the New Development Bank, really achieved collectively? I don't think they've really achieved as much as the media is portraying. Would you say that's right?
I think that's right. I mean, and I think there's been very little achieved for the BRICS as a whole, right? I think you can talk a lot about smaller group, sort of bilateral collaborations that maybe came about because they were talking about and socializing these issues at the BRICS level. But, the New Development Bank and the sort of associated investments and the like is, I think, a major achievement. I think it also provided more of a platform that for different countries that were thinking about how to be less circumscribed by sort of the dollar dominance and the like to discuss those issues. I think it's hard to sort of say things like Enbridge collaboration and other things like that on digital currencies, how much kind of it wasn't really done in a BRICS context, but the fact that countries were talking about this at BRICS meetings and in other contexts, I think socialized it. But, I think there's a lot of other sort of global groups as well that may not come down to many clear deliverables. But my view continues to be, I mean, even as we talked about sort of last year, that it's the smaller group discussions that happen in the context of the BRICS where we're likely to see some coalitions of the willing moving forward. Now, I think this latest BRICS meeting, I think the general view was, well, they didn't really accomplish much. And that's true. And I think the fact that there wasn't as much high-level participation, we had both Xi Xi and Putin staying away for different reasons. And, and I think we have a set of members that, some of whom would like to turn it into a real anti-American bloc, some of whom are very key, U.S. allies that want to strike trade deals and want to deepen their security relationships. And I'm thinking not only of India, but also the UAE, and others in that regard. And some of those countries, I think, see membership in the BRICS as a way of interacting with a lot of different groups and not closing themselves off from any parts of the world.
Yeah, no, it seems interesting that, you mentioned India. India is getting very close to the US in its relationship. And I think India's economy, I think, is going to be number 3 in 2050, I think. And it's going to be a very important player. Today it is an important player, but even a more important player than China, even in certain industries. But it just seems interesting to me that a lot of US allies, like the UAE, like India, are part of this coalition of countries. It seems like they all want to hedge their bets when dealing with the US and China.
I think it's both hedging the bets, but I also do think it's about not closing off opportunities for deeper economic ties. And they do have a valid, sort of some valid, concerns about the fact that it's not been possible to rebalance the weights and the voting memberships in the IMF and the World Bank. Though actually, paradoxically, some of the ways in which the current U.S. government would like to reshape the bank, in terms of what kind of projects they fund, maybe move more in the direction of infrastructure projects and broader energy projects that some of the BRICS countries would like to see. Now, of course, we have a lot of BRICS members who are rightly very concerned about the pullback in development aid and the like. So, and I think I was struck reading the rather long BRICS communique, right, and statement that came out, 31 pages. How much of it was about, sort of trying to both express support for multilateral institutions like the United Nations and the sort of need for change in the Bretton Woods institutions. But a lot of those guidance are sort of tropes that we see in previous statements. And I think they're also, in a sense, here, some of these institutions, really sort of struggling. So I think these countries like India who really want to not close off ties. I mean, India has been a sizable beneficiary of the rerouting of Russian discounted energy supplies in the last several years, and not only energy. Despite the negative externalities that have come from this sort of shadow fleet and the like. So I do really think that they, and I definitely put the United Arab Emirates in that bucket as well as some of the Southeast Asian countries. We'll see how the balancing act goes. I think the Trump administration, I think there's several problems with this sort of friends to everybody, approach. One is the concerns the Trump administration has about China in their supply chains, and we could see foreign countries' investment in the U.S. blocked because of China links. The other one, I think, is really relating to this question mark of the balancing act from the U.S. about whether new supply lines should be in the U.S. or should be in these other countries, and who gets to own the technology and intellectual property. And I think for all the news and noise about tariffs and other things like that, I don't think the Trump administration has clarified that strategy. But I digress from the BRICS.
But Rachel, one thing I wanted to ask you is that I wrote an article for publication in February this year on Morocco being a hub for EV manufacturing and automotive manufacturing. And what was interesting is that a lot of Chinese companies, also European companies, were manufacturing or part manufacturing in Morocco to because Morocco's got its own story and. But the thing is, what I was thinking about in my question is that even under Joe Biden, there was still a lot of tariffs on Chinese-made components coming into the US, if I'm not mistaken. And a lot of the measures against China, specifically against China, were there under Joe Biden's administration as well. So this is not just a phenomenon of Donald Trump, right?
That's right. That's right. I mean, look, I think the Trump administration, first Trump administration, significantly increased tariffs on China. Were pulled back. They were partly pulled back with the 2020 Phase One trade agreement, but those that remained in place at the start of the Biden administration were mostly kicked over. Right. So tariffs and under the Biden administration, there were selective tariffs put in place on electric vehicles, on some renewable energy products, and a lot of the sectors that the U.S. government was putting money towards supporting at home. So there was this sense of, well, we're going to do industrial policy, but we're also going to protect that investment with a tariff, right? Because there's a way. So, I mean, there are plenty of economists would say that doesn't necessarily make sense and it's not really efficient. But I think there was a logical coherence to it, a thinking about, well, what's the supply chain that needs to be built? And also these supply chains aren't built overnight. So just to say, well, how do you sort of buy the time to get from where we are today to that? But yeah, I mean, you started the Biden administration with higher tariffs on China than at the end of the Obama administration. And definitely by the end of the Biden administration, they were higher than at the start. And there was also greater use of export controls on technology, trying to limit Chinese access. So I would agree this is, more restrictions on Chinese inputs in the supply chain is a bipartisan, sort of bipartisan policy in the United States. What I will say about the Trump administration is that, I think their tariff and trade policy is a couple of things. One, the industrial policy incentives to help develop those industries have mostly been whittled away. There are some exceptions on critical minerals. As we speak today, there was a big announcement on government support for Mountain Pass mining, a major critical mineral plant. There may be a few things more like that. So one thing is they're relying more on tariffs and not on the incentives to build out long-term investment. And the other one is tariffs are a little more indiscriminate in terms of some of the product types and the like. And the other thing is they've realized the distortions that happened from the previous tariffs, which are, and I'm getting back to your Morocco analogy, I promise, that a number of countries created themselves as important hubs for manufacturing and reassembly and other things like that. And when we think about not just Morocco, but the rerouting in a sense and reconfiguration of supply chains in Asia has been remarkable. So if you had a period of time, some decades, where you had inputs and parts from around Asia and then China was the place of final assembly. Now you have a dynamic where that endpoint is not in China anymore, but it's maybe more in Vietnam or somewhere else in Southeast Asia, partly a function of tariffs, but it's also partly a function of Chinese labor costs going up and other dynamics. Now, in Morocco's case, and that was a good sort of deep dive that you did at the time, they're also leveraging the role that Morocco played, because of its trade agreements with Europe. It's sort of the broader automotive hub that Morocco and its free zones and even sort of onshore had sort of developed to expand into into EVs. And I do think there was definitely some, transshipment and some other sort of leveraging there. But I think that dynamic of the types of tariffs that we had in the first Trump administration and in the Biden administration did encourage these connector countries to increase their own content. So it reduced direct trade, say, between the US and China, less so between Europe and China, despite these hubs and dynamics like we're talking about vis-a-vis Morocco. But in the US context, the amount of items imported from Asia broadly actually went up as a share of GDP. So I think that all is to say that these are sort of blunt tools that people find workarounds to, and that in thinking about trying to develop investment and manufacturing chains, there also needs to be other policies, not just tariffs designed to keep policies out.
I mean, Rachel, if we be very candid, if we go back to Economics 101, Adam Smith, comparative advantage, doesn't it come down to all of this, that if it's cheaper to make in another country at better quality, it makes more economic sense for a lot of companies or countries, in fact, and that, America is no longer the bastion of power of economics as it once was.
Yeah, I mean, or I think it also could be less about not being the bastion, but also about what relative labor costs are, or other efficiencies. I mean, I think where it starts to get complicated is that there are non-tariff barriers, and sometimes what makes something cheaper or has comparative advantage, how much of it is governments putting their hands on the scale. And I think the challenge when thinking about Chinese policy is there's plenty of evidence that in times past, there were those incentives in different systems. The electric vehicles that are sold widely across the world and are sought after, though not here in this country in the U.S. or other places like Canada, for a variety of tariff reasons. It's not just a story of subsidies, but there were government policies that made them more attractive. There also are choices that lead to, for example, companies to park their intellectual property in one jurisdiction versus another. And I'm thinking about the pharmaceutical industry and the tech industry, who right now, and this is something, if the US really wanted to bring back production or increase revenues or the like, they also could close a loophole in their own tax system that leads to many US companies choosing to pay tax or to sort of park their revenues in Ireland. So I guess the point is that, yes, in theory, comparative advantage, yes, is the case, but unpacking what's driving that comparative advantage, I think there is an argument, whether Adam Smith would fully buy it or not, but that there are some goods where, from a defense industrial base and from a national security perspective, having diversification of supply chains, whether or not it's directly at home. And so there are segments of the market where you really just have one or two producers of something, and that creates concerns. So I think even if you follow a national security kind of argument or security of supply chains or diversity of supply chains argument, you could do that. What worries me a bit about the Trump administration policy right now is there seem to be goods involved that I don't really see a national security argument, and I don't necessarily see the associated policies that would actually build the supply chain. I see a lot of and I think, who knows where U.S. tariffs on Brazil will stand by the time this podcast, by the time you all are listening to this podcast. But at the time that we're talking, only a few hours ago, we had President Trump threaten 50% tariffs on Brazilian goods, not for any economic reason, really, but really as a political cudgel to try to lead to a legal change in Brazil relating to its former president, but also policies that the U.S. thought was in its disinterest, not in its interest. So I'm just saying that I think you can look around and you can see in the Trump administration tariff thoughts that are about protecting industries. And then you can also see cases where, where they're sort of using them for coercive political purposes. The jury's still out on how countries are going to respond to that. But I think we are at a time, unfortunately, where there's a lot of, in a sense, economics 101 that is hard to keep teaching, but it's important to keep teaching. You mentioned comparative advantage. The other one is this question mark of who pays the tariffs. And right now we're in a circumstance where so far American consumers are not facing a major increase in price because of the tariffs. And there's several reasons why that's the case. But it's one of the reasons why I think it's so important to be teaching, to talk about these things with students as well as talking about them with clients, and to, be upfront about the fact, both the kind of national security implications, but also the economic ones, and the importance of predictability and aligning with a strategy.
Before we get into tariffs, I really want to talk to you about that. There's one thing that just came to my mind was China. They've been going through their own economic struggles recently, and it just seems they're not as expansionist as they once were. The Belt and Road Initiative doesn't seem to be on everyone's radar. Xi not coming to the summit in Brazil. How much of an impact do you think China has on all of this?
Yeah, I mean, now, China's economic challenges, especially in the property markets, have really been one where exports have become more important to Chinese growth than they've been for some time. China built out a lot of capacity that led to a lot of growth, but not all of that was high quality, sustainable growth. And so we are now in a point where China's trade surplus with the world is going up. Now, some of that is because they produce good quality, sort of decent quality, decent price products. And in some areas, they're really at the cutting edge of innovation. And there have been this sectors of the market that they've cornered, like solar panels, for example, and certain segments of electric vehicles. In terms of the Belt and Road Initiative, you're right. I think over the last couple of years, we've seen China kind of stepping back from that a little bit. And I think that's driven, there are a couple of drivers of that. One of them is that some of the Belt and Road projects didn't pay out in the same way that they hoped, that the returns on them. Some of it is that China was no longer experiencing a lot of major capital inflows that they then wanted to reinvest. And so we've seen, even on the development and investment side, instead of China's development banks going out and making a lot of BRI loans, what's happening now is that Chinese government entities are providing insurance and reinsurance for some of the projects that corporations in China are doing. So I would say they're still going out, but in a different way. Also, Chinese companies have been among those that have been active in establishing these new footholds, not only in Southeast Asia, but also in places like Morocco and elsewhere. So I think it is really a bit more of a public-private partnership context. Some of these are state-owned companies, some are not. But yeah, I think China is sort of a key part of this. China, for a time, when we get into issues about challenges to the US dollar and other dynamics, get a lot of questions about the renminbi and how that is evolving, how much of a challenge to the dollar and in which areas. And the short answer there is, it depends. But ultimately, the renminbi is still not a major challenger to the dollar, in part because of capital controls, in part because of other and in part because China's own somewhat ambivalence about taking on the costs of being a reserve currency issuer. So I think they're looking to play a longer game, and they have been turning a little more sort of inward, at least on the import side, even as they turn around and try to export more. So I think China's own challenges mean it's sort of picking and choosing. And we see China very active on the certain types of commercial side of things, but very much not on the military and protecting sort of sea lanes and infrastructure like that.
I was watching Top Gun Maverick again, rewatching it yesterday on TV. They didn't name the country that they were attacking, but I think most people interpreted that it was China. And when the movie came out in 2022, there was an interesting a review by the Financial Times, and the journalist at the FT was talking about how when the original Top Gun was made in 1986, this is just before the Soviet Union and everything collapsed, and the Berlin Wall collapsed and everything, and we had this like US versus China rivalry. Would you say that American policymakers, they are cognizant of like China slowly gaining, taking on things like a reserve currency? Do you think a lot of American policymakers are aware of China's prominent or rising prominence, would you say?
I think if anything, they might be over aware, or I think the dynamic in Washington is probably to overplay and underplay sometimes at the same time. And some of that you could say is its own version of a military industrial complex that, you sort of point to threats so that you get your own sort of, revenues and the like. I think that China has a greater commitment to reducing the reliance on the dollar than necessarily the renminbi being sort of, and again, it's not only about a reserve currency. China, on the currency side, some years ago, China shifted, had a goal of internationalizing, but also deepening its own, networks at home. It really turned to developing financial payments and making those more efficient at home. And yes, we have more renminbi used in trade settlement, but we really don't have a lot of like final savings in renminbi. And if you're going to be either a reserve currency or a broader investment currency, then you really have to have that. And so I think we're in that, in that mode, and it's not only what China wants to do, it's also there are ways in which the US can be making its own assets less attractive. The most important, I think, is this question about, the fiscal dynamics and, dynamics of could there be times when the debts aren't paid back? And then the other one is that the US, and sometimes with its allies, has weaponized its currency, right? And I think you can look at it from a policymaking perspective and say, well, sometimes you got to use the tools that you have available, but there are sort of costs that people are sort of looking to. That being said, there still is nowhere that rivals the US in terms of liquidity, depth of markets, places to, if you're trying to put a lot of money somewhere, there aren't a lot of other, alternatives. And we've talked about some of the limitations where China's concerned, where Europe is concerned. Well, some of the entities that maybe are cautious about the dollar from a weaponization perspective might also be worried about the euro. And I think about sort of Russia and Russia associated entities. But also, it's still a fragmented section of 27 countries and their bonds. So that liquidity and sort of dynamics. But back to your question, from a Washington perspective, I think there have been planners in Washington very well aware of kind of China's increasing control and influence over critical supply chains, for example, critical minerals for decades now. That's only really become more mainstream recently. And on the military side, I mean, I think there is concern there. It's one of the reasons why sort of pressuring China and less Chinese reliance in the supply chain is a bipartisan issue. I just think that some people would look and say, well, you have to scale the different risks, right? It's probably not realistic to have China nowhere in the supply chain. And I think the recent standoff on export controls between the US and China in the last couple of months is, I think, a bit of a case in point. There are items that each country still relies on the other for. That could change over time, but probably not immediately. So I think if anything, across the space of thinking about the BRICS, thinking about dollar dominance, thinking about China, sort of China's role and other multipolarity, I think it's the kind of area where as things are shifting and evolving, and there is a direction of travel, there is a big risk that for some analysts of either extrapolating a very quick evolution or denigrating and saying, well, really not much has happened. And I think it's really important for all of us to kind of identify some signposts and a set of them to say, well, what are the things that are changing? And sometimes things can go from small amounts to large amounts, quite quickly. We see that. But I think, it is really an area where the risk is overhype and underhype at the same time.
I think one of the successes, I agree with everything you're saying. I think one of the successes is of BRICS. Probably one of the more limited successes was de-dollarization, in the sense that now the US dollar, yes, it still is the world's reserve currency, but its usage is becoming a lot less in international trade compared to what it once was. But like, say, if you look at like India and the UAE, they settle in each other's currencies when India's buying oil from the UAE, for example. So yes, I do see that. But one thing I kind of a little bit disagree with you on is, just to have a friendly disagree, is that this idea that the US has been a safe haven. If you look at US treasuries, traditionally they've been a safe haven asset when times of volatility. But what we're seeing now, Rachel, is that like even US treasuries are like spiking a lot. And that's not obviously there's a lot to do with what's going on domestically in the US and Donald Trump's own economic policies. But like, do you think the US is still a safe haven as it once was?
No, and I didn't, and if I implied that it was a safe haven, I didn't mean to say that. I was pointing to liquidity and size of the market. Now, that doesn't mean that you're necessarily always going to be, strong returns. I think some of it is if you're a really big investor, a sovereign wealth fund, a reserve manager, it's hard to fully avoid the US. What I do think we've seen in the last couple of months, and it is really about US policy, and I would say more as much about US fiscal fiscal policy and threats to the independence of the Federal Reserve as it is the tariff and trade policy. But I think you had a lot of investors who said, we're not comfortable having unhedged US positions. So, and once you're going to hedge the currency risk of, say, a US equity investment or the like, then some investors are going to sort of lighten up on their exposure. So I think we saw an episode of that. And we have seen other markets, some of it was sort of catch up after sort of several years of especially US equity outperformance and the like of European, especially in euro terms, they're in sort of rallying, sort of fairly strongly this year. So, I'm very hesitant about using the term safe haven. But I do think the depth and liquidity of the depth of the market. And I think you rightly, Hassan, point out that, not always as liquid. And these spikes, I think, are part of that. And that's where I think there's the concern about weaponization of the dollar via sanctions and other restrictions, but the domestic economic policy choices are probably where the greatest, sort of the greater risks are. And it's interesting to me, I think this summer, a couple of good books are out about the dollar. One from Paul Bluestein called King Dollar that I'd highly recommend, and another one from Ken Rogoff, I think it's your dollar, I may not be citing that properly. Anyway, good book, and I think highlighting, sort of highlighting, these things. So yeah, not per se safe haven, going forward, but I think it also, the dynamics of the capital structure is such that it's hard for people to avoid. Now, I think you rightly highlight that there is more settlement in other currencies, but don't forget, what's the UAE dirham pegged to? Where does
Very
the UAE dirham derive its value? It's pegged to the dollar. So India and the UAE settling in their own currencies is a step removed from U.S. Treasury scrutiny, but it's only arguably a small step. But, look, I'm watching really closely some of these dynamics of like wholesale central bank digital currency dynamics, some of the agreements between Ambridge, that the Central Bank of the UAE, People's Bank of China, some of the Southeast Asian countries are sort of involved in. These could not only speed up payments, right, which across borders can take a long time, right, especially in volume, but they could provide additional pathways. And I will note that in the BRICS statement, they did endorse the work they're still doing on BRICS related settlement. But I'll note that they're commending the work they're doing. There's not necessarily something new. And I do think that's where it would be useful for all of us sort of tracking the market if some of the countries and even payment systems involved provided a little more transparency about what the volumes actually are. Because I think what we've seen are some really promising and interesting pilot projects for different settlements. But the question mark is, how does that really translate into, into volumes? The China, for example, has connected a lot more countries to CIPS, their payment, payment system. That's something that could be available in a crisis. Right now, there are increased volumes, but it's not really an alternative to SWIFT, which is a global communication system for banks. Why not? Partly because SWIFT still carries a lot more, but also because SIPS actually uses some of the SWIFT communication systems. So, but I feel like as we study these things as economists, as political economists and the like, we really have to sort of look at both what's happening now and what could be used in a crisis, whether that's swap lines, whether that's new payment systems. Because if we look at Russia's case, a lot of its resilience came from things like setting up, yes, more costly domestic payment systems that disconnected from global credit card systems. And it took them, it didn't work seamlessly. It might not have come into effect in full amount if there hadn't been a war. But I do think we have both more economic competition, economic statecraft, conflicts of various sorts that mean a lot of countries are hedging. And a lot of companies need to be thinking more seriously about where their supply chain vulnerabilities lie.
One thing I wanted to ask you, I don't know if you know too much about this, but in cryptocurrency, particularly Bitcoin, obviously it's been rallying a lot since Donald Trump came into office. He's done a lot, and he's trying to introduce a lot of legislation. One thing that was interesting, I mentioned this to an asset manager in the last episode, was a lot of American companies are buying Bitcoin, not just as as a strategy, but also, as he was telling me, they're using it because they're betting on Donald Trump, implementing a lot of these kind of pro-crypto, pro-Bitcoin policies. Do you think countries as well will turn towards these kind of technologies in this payment system?
Yeah, some might, and some are sort of issuing their own. Right, we have a couple of countries. Some of them are still sort of at sizable pilot phase of, issuing their own, or especially these dynamics of facilitating stable coins, right? So, I mean, you're talking about Bitcoin, but I actually think the amount of people, in part, taking advantage of the spread, right? Sort of stable coin issuers tend to hold a lot of interest bearing assets, the bonds and the like. Hong Kong, for example, just came out with some new sort of stablecoin legislation and the like. But I think so. I think countries are thinking about that. I think some investors are, just as maybe they're thinking about with gold, they're thinking, well, it could make sense to have some portion of this in the portfolio. And if a number of people say, well, maybe we should have X percent, even if it's a small percentage, that could have an impact. One of the challenges with Bitcoin, its market cap has grown, but the volumes are just not there to tackle the kind of, trade sort of trade flows that we're talking about, or the capital sort of dynamics. So there is a question there, but I think there are some use cases. On the Trump side, we definitely moved from a Biden administration and even a Congress that was outright quite negative towards digital assets, to one in the Trump administration that is quite negative towards any digital asset that might be issued by the U.S. government, which I think is probably a bit of an own goal. So that's not necessarily a great compromise, but they have been more open on a variety of different things, especially, as I say, relating to stable coins and other meme coins and the like. I think those who are hoping that there will be a government bid for Bitcoin or Ethereum or different other coins because of a U.S. sovereign fund or other things like that might be a bit overstating it. I mean, we could, if anything, see the government wanting to sort of monetize and take advantage of some of the run-up of the sort of assets that they seized because of their involvement in illicit activities. So the greater government interest in cryptocurrency and digital assets more generally isn't necessarily just an upward move.
As we bring the podcast to a close shortly, one of the things I wanted to ask you was, we're recording this on the 10th of July, and a lot's happening in the news feeds. You mentioned about Trump wanting to enforce tariffs on Brazil and other BRICS countries. Where do you see for the second half of the year? Do you think this is going to be what we're going to be dealing with, like tariffs and just like off the cuff remarks by Donald Trump, or do you think it'll be a bit more measured?
Probably not more measured. So I think that this tariff story and the tariff uncertainty has some more time to play out, especially in the next couple of weeks, sort of, and probably between now and Labor Day. I think, as we're recording this and sort of second week of July, we've just had a flurry of letters threatening tariffs. Brazil's was maybe the most surprising because Brazil is a country with which that buys more from the U.S. than it sells to the U.S. And really one of the ones that had a very clear political motivation or political policy change goal, as opposed to an economic policy change goal, right, of tariffs. So look, I think even the fact so anyway, so we're heading up to another self-imposed deadline of August 1, where we might see more tariff sort of adjustments. And even at that point, these tariffs might not be the final result. Now, in a sense, Trump feels emboldened about, setting these tariffs because so far there's not been a meaningful inflationary impact from the tariffs. That's partly due to the fact that there was a lot of stockpiling, buying in things before the tariffs came into effect. There also are some goods that are still exempt from tariffs, like everybody's iPhones and consumer electronics are currently exempt or mostly exempt for a variety of reasons. But some of the things that are announced are sort of coming through the pipeline. So that question mark is, will the Trump administration become, more stable and predictable? I'm not sure, but I think as we head into next year, there's going to be more focus will be sort of getting towards, the midterm elections. People are already running in that context. And so I think there's the fact that domestic investment in the US has been struggling will be more of a concern. The other thing that struck my mind in all of these tariff letters was this pledge to expedite and make more routine approvals and investment decisions in the US. And this is something that entities in the Middle East in particular, and Southeast Asia for that matter, have been sort of speaking out very strongly. There's not yet been sort of clarity about speedy access to CFIUS reviews, national security reviews, and the like. And I think clarity both on that and on some of the other tax implications is going to be really important. So yeah, I don't think the Trump administration and Trump himself is likely to be that predictable. But we'll see, and we'll particularly see what happens now that the big legislative agenda that the Trump administration wanted to pass, which is this big
beautiful
beautiful bill, how that sort of comes into place. But yeah, definitely, I think lots of tariff headlines, lots of uncertainty for business, and even individuals in the coming few weeks and months. I think for much of the remainder of the year.
Yeah, what's interesting is that if you look at you mentioning all of this, but like the stock market just seems to be looking the other way. Like Nvidia just hit 4 trillion market cap, and the S&P 500 seems to be rallying, even though there's like a trade war with the rest of the world. How come there's this disconnect between the markets and economic policy?
Yeah, I think two things. One is this fact that the markets have gotten into this view of taco, that Trump always chickens out. I think the answer is he doesn't check out on everything. But this element of if there's market, sort of that he might threaten something, but he settles at a level that's much less. Now, the challenge to that, and I think we'll see how that comes in the remainder of the summer when often trading volumes are lower, right? So that's another sort of risk as people are going on holiday and other things like that, is if there's not market pressure, will Trump still chicken out, right? If there's not that feedback loop. And the answer might be, I think Trump administration Mark II versus Trump Mark I is less sensitive to just financial market pressure and more sensitive to US businesses calling him up and saying, we're going to have to shut factories. We're going to have to, there's going to be real economic pain. We're going to have to lay off workers. We're going to have to do that. And I think people are cautiously probably going to have to engage in those conversations because, Trump is sort of, even the steel and aluminum tariffs are, sort of hard to absorb for downstream manufacturing interests. So any case, so the disconnect is partly this view of, well, he's threatened this, but he'll settle at something lower than that. And then the other one is that because so far the tariffs have not been very inflationary, I think there's some market, hope that interest rate cuts are coming. I think the Fed right now is quite cautious because, the job market's doing okay. It's not super strong, but it's also not super weak. And inflation is sticky. But I think if you read between the lines of the Fed statements, sort of their concern is that buyers are going to have to start passing on some of the additional tariff sort of dynamics. So I think all of that suggests, the news and the noise might not just be about tariffs. We could have other things sort of, in the mix, including around monetary policy. But I do think that there will be sort of noise to navigate, particularly because the long end of the interest rate sort of curve seems pretty stuck, and then that's partly a function of this big beautiful bill was more of a distribution of who benefits from tax incentives rather than actually a reduction. But yeah, we'll see. We'll see if the global markets are still continue to be so immune, or to what extent, and maybe we're back to not necessarily a safe haven, but a rebalancing story.
Great. Rachel, tell us any projects you may be working on, any upcoming projects you may be working on.
Thanks, Hassan. So one of the things I've been working on is about financialization of critical minerals. It ties into this whole question about China's role in the supply chain, but also the importance for investors and producers to hedge their costs, right? China dominating these supply chains is also, when they want to, able to flood the market. And so how do you go about, creating some financial tools that either governments could use to implicitly support stockpiles, or end users could use to hedge their risks? I'll have something coming out on that towards the end of the summer. And then just generally, tracking, sort of tracking this sort of new use of how sanctions and export controls and tariffs and investment policies are all interacting, both in heavily sanctioned countries like Iran and even Russia, but also just more generally, as with the trade in China. And I will say that I've been watching very closely and trying to support where I can people who are trying to navigate this sanctions easing story in Syria and lots of other challenges beyond sanctions, but sort of watching that sort of case. And as I say, trying to support those who are thinking about the right ways that they could sort of support reconstruction. So, lots of difficulties, lots of challenges ahead, but it's also a sign that sometimes bureaucracies can move quickly when they want to get something done.
And amongst all this activities and all your stuff, are you active on social media? You must be reading Twitter all the time and checking Reddit.
Yeah, I'm not on Reddit maybe as much as I should be, but you'll have to tell me which subgroups I should be signed up to. I am active on social media, though occasionally I think, as we all should, try to sort of step back and take a break. I'm on X, I'm on Blue Sky, and sharing some insights on LinkedIn, and in most places I'm on RE Ziemba. And as mentioned, when I have something a little longer to try to puzzle out, I try to do that on Substack. I mean, these days there are so many different people able to kind of develop their own platforms and think about what they're saying. I feel like you have to go a few more, few more places, but there's still this element of needing to discern, who's good at what, and to sort of cast your critical eye on what's driving their assumptions, what data are they basing that on, and to sort of set your own signposts and set your own scenarios. So yeah, feel free to reach out to any of you watching. Feel free to reach out on any of those platforms, and I'm always happy to chat about these with you, Hassan, but also with any of the members of your community.
No, I was just going to say, I'll link all your social media and your Substack in the show notes. But Rachel Ziemba, really great to catch up with you once again. We've got to come back again, and maybe in like 6 months' time, and see if anything's changed. I'm sure everything will change.
See if I'm right about the fall.
Yeah, so I'm sure.
I will fully admit to what I missed. I promise.
So yeah, no, this has been a great part 2, and I'm looking forward to part 3. But I really thank you again for your time and your insights. And yeah, I hope you have a great day ahead.
Thank you. You too.